Hey guys, today I'm going to discuss about an aspect which is very frequently used in context of real estate modeling, and whenever we are trying to analyze a real estate project. This is a subject which is often been discussed with the bankers, and they always insist on placing across stuff called cash budget, right? So it's very important in context of the bankers, because this cash budget analysis helps them to really understand what's the level of financing that they need to do on a month-to-month basis. So over here I am trying to show you as to how a cash budget analysis is done and how it actually looks, right? So as you see over here, this is the main segment of the cash budget analysis, where we get to see cash receipts on one side and the cash payments on the other side, right? So so this is a period of say April 13 to March 14, which is been studied, and it is tried to be understood as to how much of financing has to be done by the bank on a month-to-month basis, right? So it's primarily from a working capital perspective the decision has to be, right? So as we see over here that the first row is of debtors realization. So let's see what is how the debtors realization segment looks like. So as you see over here, this is a debtors realization section where we have the opening debtors, add sales during the month, and the less the closing debtors. So as we see, the debtors, this set of debtors are computed in terms of on a monthly basis, and that is how we are getting on to the net debtors realization figure, right? So this is what so over here, when we are saying that the closing debtors are deducted, it means that ideally we are receiving the money from the debtors, so there is no receivable which is left, right? So in real estate, as we know, the payment is done in a staggered manner, and so at every month there is some sort of payment which is flowing in, and that is how the debtors figure is getting reduced, right? And plus additional sales is happening, and which is also increasing the data on the other side. So this is a computation that is done, which helps us to, at the end of the day, reach to the debtors realization figure, right? So so this is the figure which is then taken on the top over here, as you get to see. So this is the debtors realization segment. Then non-operational receipts may be there may be some non-operational income as well, but there is no figure out here. And the third is the bank working capital. So this is something which is the objective for which the study is done. So it is not placed any figure at this point of time, because that's the decision that has to come up as to how much of working capital needs to be shared by the bank, right? On the expenses side, we see expenses incurred during the year. So these are certain expenses which gets to be incurred, right? So that is taken from this segment, which is the payment to creditors, right? So as and when so it starts with opening creditors, then expenses incurred during the year is added, and less closing creditors, basically the payable is been paid out, right? So that's how the computation is done, and these figures then flow in to this segment, which is expenses incurred during this period. Then you have the interest cost also, because if you are taking financing, then it adds to the interest cost. But over here, this cost is from the perspective of the term loan, and not from the perspective of working capital, because we need to determine what is the extent of working capital that is going to come up basis the gap which is there, right? And, so over here we are getting to see the existing term loan and the new term loan, and so interest of the existing term loan, and if some new term loan is taken, the interest on account of that. So that is the figure which flows above. Then we have the loan repayment. So if there is some loan repayment, as we get to see, it's happening every quarter, that's the amount which is considered over here. And finally the revenue sharing. So if there is some sort of a revenue sharing arrangement with someone, that figure is computed over here. So as we see D31, that means the sales that is happening, vis-a-vis that there is a revenue sharing percentage which is happening. So this is just from a computation perspective, just you can see over here that there is a revenue sharing which is happening as well, right? So this really frames the total payments part of it, and the difference is something which takes us to the net surplus or deficit part. And then when we adjust it with the opening cash and bank balance, we get to the figure of closing cash and bank balance. So over here we get to see that the company is highest negative minus 1.53 in December 13, right? So this is something which we get to see out here. So so as we see, the term loan payment also we have seen above, we've been paid every quarter, so that is also taken in the computation. So this is a very simplistic form of a cash budget analysis which is done by a bank, and from a real estate project perspective. And this is something which is widely been used by both the investment bankers as well as the banks in order to come to some sort of an agreement as to what is the extent of working capital one is looking for, right? So I hope that you have learned something today, and we'll see you in the next video, right? Thanks a lot. Bye.